If you are over 60, you could be throwing away $5,000 to $10,000 a year on a life insurance policy your family doesn't even need. You've been told to keep the coverage, but the truth is, the moment your mortgage is paid off, that policy could become the biggest waste of your retirement money. I'm giving you the clear 3-point checklist that lets you know if you can cancel your policy today and instantly put those premiums back in your pocket. But be warned, if you miss one of the 5 critical reasons to keep it, you could leave your kids with a $15,000 debt instead of an inheritance. Let's start by acknowledging when you might not need life insurance anymore. If you find yourself in this category, you can likely cancel your policy and redirect that money to improve your retirement. Scenario 1. You have no dependents. If you're single, a widow, or widower, and your children are fully independent adults with their own careers and families, the core purpose of income replacement is gone. Your passing would not create a financial crisis for anyone. Scenario 2. You have sufficient assets. If you've built a sizable retirement nest egg, own your home outright, and have more than enough savings to cover your final expenses, like funeral costs and any lingering medical bills, then your estate can handle these costs without needing an insurance payout. Your assets are your family's safety net. Scenario 3. Your policy is too expensive. If the premiums on an existing policy are becoming a financial burden, straining your monthly budget, and forcing you to choose between the insurance and other essentials, it may be time to let it go. The point of insurance is to provide peace of mind, not financial stress. If those scenarios describe you, then you can probably comfortably answer no to the question. But for many seniors, life insurance remains a critical tool. Let's dive into the 5 key reasons a senior might absolutely need to keep or purchase a policy. Reason number 1, to cover final expenses. This is the most common and pressing reason for seniors. The average cost of a funeral and burial today can easily range from $7,000 to $15,000 or more. This is a significant, unexpected expense that can force your grieving family to drain their savings or go into debt. A final expense insurance policy, which is a small whole life policy designed for this purpose, provides a dedicated tax-free lump sum to cover these costs. It's a gift of financial peace to your children, ensuring they can focus on grieving, not on financial stress. Reason number 2, to leave an inheritance. Perhaps you want to leave something for your children or grandchildren, but your retirement assets are modest. A life insurance policy can be a powerful tool for legacy building. For a relatively manageable monthly premium, you can guarantee a specific tax-free sum of money to your beneficiaries, bypassing the often slow and public process of probate court. This is a way to create an immediate inheritance even if you don't have a large investment portfolio. Reason number 3, to pay off debts. Many seniors carry debt into retirement. This could be a remaining mortgage balance, car loans, credit card debt, or even co-signed student loans for a grandchild. If you pass away, these debts don't just disappear. They become the responsibility of your estate. If your estate doesn't have enough liquid cash, it might force the sale of the family home or other assets to settle the debts. A life insurance policy can be structured to pay off these specific obligations, ensuring your spouse can stay in the home and your assets are passed on intact. Reason number 4, to provide for a dependent with special needs. If you have a child or another dependent with a lifelong disability who relies on your financial support, your need for life insurance doesn't end at age 65. In fact, it becomes even more critical. The death benefit from a permanent life insurance policy can be used to fund a special needs trust, ensuring that your dependent has the resources they need for care, housing, and quality of life long after you're gone, without affecting their eligibility for government benefits. Reason number 5, for estate planning and taxes. This reason applies to a smaller, wealthier segment of seniors. If you have a large estate that may be subject to federal or state estate taxes upon your death, those taxes are due in cash and often within 9 months. This can force your heirs to sell a family business or property quickly and at a loss. A permanent life insurance policy can be set up to provide the liquid cash specifically to pay these taxes, preserving the full value of your estate for your heirs. Now, if you've decided you do have a need, the next question is, what type of life insurance is available and suitable for a senior? For new coverage, you're generally looking at 2 main options. Final expense insurance. As we mentioned, this is a small whole life policy, typically $5,000 to $25,000. It's designed for this exact purpose. The big advantage is that it's often guaranteed issue or simplified issue, meaning you won't have to take a medical exam. But be aware of graded death benefits, which may not pay the full amount if you pass away from natural causes within the first 2 years. Guaranteed universal life. This is a type of permanent insurance that can be a good middle ground. It's more affordable than whole life because it's focused purely on the death benefit, with little cash value buildup. It's designed to last until a specific age like 90, 100, or 121. This can be a cost-effective way to secure a larger death benefit for a specific need, like paying off a mortgage. It's crucial to understand that applying for traditional term or whole life insurance in your 60s and 70s can be very expensive and difficult to qualify for medically. Final expense and GUL policies are the most accessible paths. So let's bring it all together. Do seniors really need life insurance? The answer is, it depends entirely on your personal and financial circumstances. You should lean towards a no if you have no dependents, ample assets, and your policy premiums are a financial burden. You should lean towards a yes if you have specific financial obligations you don't want to leave to your family, such as final expenses, outstanding debts, a dependent who needs lifelong care, or a desire to create a guaranteed tax-free inheritance. Your homework is to sit down and honestly assess which category you fall into. Look at your debts, your assets, and the people who depend on you. That will give you your answer. Life insurance in your senior years isn't about replacing a paycheck. It's about fulfilling final responsibilities and leaving a legacy of love, not debt.